Still maintaining this +4 breakout, right? Breaking out of this larger monthly range, continuing basically still at the high on the close yesterday. We did finish on a spike to the upside for the daily, trading about 10 points off the high in the Globex session. Remember, these profiles are only cash session. What we can see here, right, we're above this previous high still. That's at 68. We're above this larger monthly balance. We're still one time framing higher on the monthly. So one thing that can happen, and one thing that does happen a lot, is when we're seeing a trend on a monthly basis, a lot of times you get a pullback, and when that pullback comes, everyone in the market kind of flips from thinking the market's going to go up to assuming the worst, that the market's going to go down. And so this helps us maintain perspective every day on open or before the open. We always want to look at this and understand, like, okay, maybe intraday we do get some pullback, but we just want to be understanding that until we get a cessation of one time framing starting from the daily, then we really want to just be aware of that. On the weekly, right, we're continuing to one time frame higher, setting up this developing +4. We do have a little bit of news today, consumer confidence, but tomorrow's the big news of the week. Remember, it's a lighter traded week because most of the hedge funds and, well, maybe not hedge funds, but a lot of institutional money is already positioned where they want to be positioned, and they've gone on vacation for the holidays. Whatever holidays they celebrate. And we want to be aware of that, right? So a big level that we're watching this week, and we've talked about this since Monday, is that 47.68. Above that 47.68, it becomes a little bit more difficult to be short. We can kind of talk about opportunities to be short, I guess. There hasn't been any this week, and something we talked about every day this week is that you're better off just waiting for the pullback. Unless there's a move below that 47.68, then that kind of unlocks the opportunity for a deeper pullback that can possibly pull the market maybe back down into this gap, or maybe back into this balance. Switching over to the daily, you can see we're still one time framing higher, finishing yesterday on a +4. And so this is going to be kind of a key today, right? Because we get that settle, and we know that when we finish with a +4, anything below that settle typically can be a little bit dangerous, or should at least be exercised with a little bit of caution. So the play today is looking like it's going to be a play number 2. We're going to be opening up inside value. But because we're below that settle, we need to be cautious of that upside. If the market can't get back above its settle, which is about 20 quarter, then we need to be cautious with the longs, right? The market's getting a little bit overextended and could possibly pull back. Now, if we try to identify some liquidity zones here, we can see some single prints on the daily chart sitting right below 47.50. That would give us a cessation of one time framing on a daily chart, just indicating some possible change, not necessarily any significant change, right? Significant change for me typically comes in on the weekly. If you get a weekly cessation of one time framing or a weekly change, then that kind of opens your eyes. Okay, I need to pay attention. But on a daily chart, it's really just going to depend on where the close is. For me, you want to pay attention to that close. Did we get a strong close? Did we get a weak close? Did we get a neutral close? Did we close below or outside of a previous range? Things like that. Now, with this, and this is something that we talked about yesterday, when we are putting in these bars, I know a lot of people have been looking for shorts, not in here, but a lot of people in the market in general. And we had talked about, well, you really want to be waiting for any possible shorts until you get a market that has excess on a high and you get a close lower with a cessation of one time framing. So we haven't had that yet, right? We've been one time framing up since the 4th, and the market just kind of keeps continuing higher. Very full bar yesterday, and so we're going to want to be paying attention to that 20 quarter. That's really going to be the key today. Switch over to the profiles here and take a closer look. Little recap from yesterday, right? A very P looking profile that ended up trapping enough intraday shorts and running them up at the end of the day, right? Stopping them all out, probably gathering a bunch of liquidity. You figure all these shorts are in the market. What do they have to do as this thing runs up? Because they're day time frame traders, or what I like to call short money. They have to buy their positions back. Well, someone up there is selling that position, saying, "Oh, hey, I'll help you make the trade. I'll help you make the trade." So there's a seller up there, right? And now that we have a little bit of excess, we can kind of assume that. So it's going to be interesting here with today, right? We had a +4, and one thing that we talked about, and I think my dad actually capitalized on this, is when we trade back below the settle on a +4, it's sometimes a good time to take a short, because that's telling you that there's some momentum traders off sides, right? Because if we get momentum in the cash session, we should just get continuation in the overnight session, because all the laggard people, all the people that traded wrong this day, typically jump into the overnight thinking, "Oh, well, I'll just get it the other way and just carry it overnight, and when I wake up, I'll be rich," things like that. So you can see they kind of gathered up more inventory as all the momentum traders that got stopped out from their shorts started to pile into longs, or even started just to cover their longs. So we're going to treat this, and it is a spike. So we do have a spike, and we're going to be opening below the spike, which is a sign of weakness. And like I said, I typically am not really going to be keen on shorts, but sometimes this happens. If you guys remember, there was a day last week where we talked about, I was thinking the market was going to, possibly get us into some shorts. The market ended up being kind of a two-way day, finishing right where it opened. And so maybe we get something like that again today, or maybe we drill down, try to find some buyer somewhere. We'll have to wait and see, but I am kind of leaning short here early, just because of how weak the market is looking. Now, with that being said, we do have overnight inventory 100% net short, or not 100%, but pretty close, right? We'll call it 90% net short. And we have a double distribution in the overnight session. So the real key thing, and with our point of control kind of right at the top of this distribution from yesterday, the real key thing for me for the market to get long is to open up without breaking these lows, or maybe just a quick take of those lows, reclaim this upper distribution, and then try to capitalize on a retest of the settle and the correction of the overnight inventory. If this is going to happen, it's going to be quick. You're going to get a move down, and then a move that comes back across the open that takes us straight above this upper distribution. And that's going to be the decision time, right? You'll look to trade it into this upper distribution and see if they can get acceptance back over that settle. Acceptance back over that settle can just, give us that continuation. We had somebody yesterday, I think it was Doped, was saying like we typically trade to 27 after a break of the century mark here. So pretty good call. Pretty much call that a tap in. Plan for the downside, right? If we get this break and come back up and can't reclaim the settle, and you kind of get like this back and forth across the open, that's going to kind of give you the signs of an unsure market. And this low here, which is at 48.02, which happens to be a very mechanical low, is going to be, a kind of a go with. So you're looking at about 8 points there, possibility of a nice trade, and then a break, and look to take that point of control from the A low yesterday. And we have an untouched settle at 47.93. So definitely some shorts still stuck, some intraday shorts in our T2 profile that we'll be looking to cover, and you'll probably run into some buying around that 47.86 level, I imagine. So there might be a decent trade there from like the 06 to the 86. So a nice little 20-pointer trying to set up for us. But other than that, our levels to the upside are, what's to the upside, are 48.63. So go ahead and mark these. We got 48.63. And then above that was 49.40. So like just a way higher, so we don't have to worry about that now. Those are the kind of levels I'm looking for on the upside. Other than that, you guys have a wonderful day. Make sure that you're managing risk and sticking to your trade plan. And I'll see you guys tomorrow.